Ouch, this hurts. The bulls. This is Moderna on the daily time frame. Today was down almost 4%. And I was saying in my previous video that this is clearly a head and shoulder, and it looked like it played out fairly well. It broke down. Actually, let me draw this better. It broke down to this level, and I said when it broke down here, I said probably we'll retest it, and then now we're heading down. So Moderna looks terribly bearish as of right now. And I want to show you a few indicators and also want to show you a key level to watch, and we're close to it for a potential bounce. So indicators, the indicators, everything is bearish. The price is below the 5 days double exponential moving average that is crossed to the bears, below the 20 days double exponential moving average that is crossed below the 50 days double exponential moving average. So far everything's bearish. MACD totally crossed to the bears, below the zero, very bearish. RSI going straight down, so very bearish. PMO completely bearish. So Moderna is not looking good. And if you think about it, the peak of the volume is down here at 140. So it has a long, very long way to go. But I don't expect Moderna to go down in a straight line. And I have some positive news to give you. So if you map this level, actually, if you track this level of previous lows, as you can see, we are close, or actually, let me draw a little bit better. So we are close, there it is, to a level that was or has represented a support level. So this was support, this was support, this here was support, this was kind of resistance. So it's a really important level. And how is it going to act over here? I think it's going to act like a support temporarily. Why? Because this level, it's key to this level over here that has basically no volume. So what I notice is that usually when the price gets drawn to no volume, it corresponds to a level on which the price bounces. And where will it bounce? Well, I think it's going to bounce over here, like I just said. I think it's going to bounce over here. And where is it going to go? I think it's going to fill the gap over here, this gap. And the level is what, 170 something? Yeah, 172, 171. So that's what I think is going to happen. Of course, that's just my theory based on all these trend lines, but it can happen. And I want to give you one more important thing before we do that. So if we consider that level and we use a Fibonacci retracement from this peak here all the way down to here, well, the retracement around 50 to 60% here, it corresponds to the close of that gap. Moreover, if I delete this Fibonacci and I do kind of a big one here, okay, again, the retracement corresponds to a 30% retracement. So it looks possible if it bounces on the level that I just previously gave you. Now, I want to use Fibonacci to see if it is a real projection to expect the price to go over time down to 140. So if we consider this, we just reached the 100% move in Fibonacci, and this is 161% that usually plays out really well on the daily time frame, and 140 is even before the 161 level. So 140 can be a real target, guys. And if we want to be a little bit more conservative, I'm gonna delete this Fibonacci and I'm gonna draw it differently to see what's gonna happen. If we consider, I'm gonna be, yeah, and if we consider this high, I'm gonna be even conservative. This is the low, okay? We just broke that low. Well, 100% move in Fibonacci is exactly, well, it's around 140. It's exactly here, guys. This is the level. So Fibonacci is telling us that that's where we're going. So right now, because we broke this level, Fibonacci is confirmed. We broke this low, so Fibonacci is confirmed. And there is a lot of down pressure. So one thing I want to explain here, and I'm going to close the video with this explanation. When I say that the price is going to go to 140, it doesn't mean it's going to go to 140 tomorrow. It doesn't mean that it's going to go to 140 this week. It means that over the course of the weeks, it will go there. It can take a month, it can take 2 months, it can take 3 months. So if you position yourself on a short position, or with options you buy puts, you have to buy time. Don't buy weekly puts and then say, oh, well, I saw that video was saying we were going to 140 and instead, it bounced to 170. Well, sure, it bounced to 170 and then 3 months from now, we're down to 140. So if you buy puts, you have to buy puts that expires at least 4, 5, 6 months out. That's what I do, and that's what I make more often than not money. So that's it. This is the level. I hope you enjoyed the video. Please leave a like, comment, a subscription to the channel. It's free. Just press the bell on YouTube, and we'll talk in probably